Hi, everyone. I'm Bassim Michael with Michael and Company CPAs. And I am very happy to be introducing to you a very special guest today. She's a good friend of mine, and I think many of you know her. We have with us today Anjali Singh. And Anjali, I'm going to let you introduce yourself and tell us what you do and why you're here today.
Great. Well, thank you, Bassim, so much. And for everybody on the call, I do consider Bassim a good friend. He's also my CPA. I begged him to take me on, even though I'm actually not a dentist. So I know firsthand you are very well cared for. Bassim asked me to talk, and I am a certified financial planner as well as an insurance broker. And with COVID, there have been so many things to keep track of for business owners, PPP, EIDL, terminating employees, and insurance is something that's been, confusing, and we've been fielding a lot of questions as well as opening up claims. So Bassim asked me to join today and walk through some of the advice I've been giving my clients in terms of managing claims as well as positioning for reopening. So I was planning on going through just some of the basic advice that I give. There's a lot of variance in terms of actual policies, whatever you have, and the state you're living in, but at least this would give you a starting point to go back to whoever you're working with and make sure that you're not missing anything. And I have to give you guys warning, I do have some allergies going on. It's not coronavirus, but hopefully I don't have to clear my throat or cough too many times today. So I'd say the biggest hot button issue I'm hearing about is the business interruption claims. Now, almost every policy I'm aware of in the US has an exclusion for viruses or pandemics. That being said, it is important that you actually contact your carrier and file a claim. And there's a couple reasons why. On some of the early SBA paperwork I saw in late March, early April, they were actually asking if you had filed a business interruption claim. So for some of that, I think it was for the EIDL loans, they are asking about that.
Huh.
A very common question I'm getting is, if you report a claim, will your rates go up? And the answer is, for reporting a claim, no. Now, if they do end up paying out, you should expect your rates to go up. But frankly, from what we're seeing, the virus and pandemic exclusions aren't allowing for payout, and business interruption is for the lost revenue that happened. But let's say the government makes a movement, which they've been doing in a number of insurance issues along with other things. Early reporting is key. So if you haven't contacted your agent already to make a business interruption claim from your commercial or property policy, you'll hear it referred to both ways. You definitely want to do so. That's how that works. Now, with the reopening, I know a lot of dentists and healthcare providers are having to make investments into their office for, sneeze guards or whatever you want to call it for the front reception area, some additional sterilizing supplies and such. You do want to also keep track of what you're spending and potentially update your business property amount to make sure that if you had to redo that, if there was, an unrelated fire, vandalism or what have you, you had the funds to do that. I'm also encouraging people, as they have downtime, to take inventories of their office to make sure that their overall coverage is where it should be. It's very easy to get busy with life, and you may have forgotten you bought a digital X-ray or CEREC machine or what have you. Well, CEREC's a bad example, but a bigger investment, and sometimes those numbers lag a little bit.
So you're basically saying you need to be evaluating whether you're exposed, meaning your coverage for, say, the amount of equipment is not enough to replace what you already have in your office, right?
Correct. So like, let's say you bought a $50K worth of supplies or dental equipment at the end of the year, because I know you're really good about telling clients to make last minute, or not last minute, but year-end investments to maximize tax benefits. And maybe somebody forgot during the holidays to update their plan. If you had a claim and your office was wiped out, let's say due to a fire or, a sprinkler bust and it floods the office, you might have a gap there.
Mm-hmm.
So, and it's a good practice anyways to take an inventory of your office every so often, just so if there is anything, you have the records.
Right. And that's especially true, like if you bought a practice maybe 2 or 3 years ago and the practice had really old equipment.
Yeah.
And the amount that maybe you put on your insurance application for equipment was not really big because the value of the equipment wasn't that much. But then 2 or 3 years later, you've replaced the equipment and maybe you've invested 300,000 or 400,000 in new equipment and chairs and now you, like you said, you're not adequately covered for the investments that you made.
Well, and the metric I use, Bassim, is I tell people if you had to replace
Anjali, I think your connection is cutting up. I don't know if it's you or me.
Okay, hold on one second. I'm gonna go off my Wi-Fi if that helps. Is that better, Bassim?
Yeah, I can hear you now. Yeah.
Okay. Sorry about that. You're actually blank.
Okay, I wonder if it's me. Can you guys hear me?
Of any other, you want to do an inventory of the entire office, not just the operatories. Mm-hmm. So all the waiting room furniture, if you have any specialty coffee machines. I know in my dentist's office, they have TVs in the ceiling. So you can watch when you're in the chair. You want to capture all of that. Sure. And some carriers have metrics where, and I don't do this in my office, but I've seen it where they just take the number of operatories, multiply it by, a random number, and that's how they do the business property. That often doesn't capture the true value of what's in the office.
Right.
So you want to treat it somewhat like a homeowner's plan and go through and capture every last thing. I think pictures or video are a great idea for that too.
I see. Now, how do you go about doing the update? Besides contacting your agent, so what type of documentation do they require? Do they have like an application or a form to fill out? How do you go about doing that?
So for an existing policy, it's simple as telling your, at least for the carriers I use, you just tell the agent, I did an inventory and my contents of my practice are worth, let's say 450,000. And what they can do is to compare it to what's in your policy. And I mean, in my office, we'll take a simple email or phone call. And then if there's a difference in amount, we'll find out what the cost is. And then we'll let the client know. And if they want to go ahead and make the upgrade, we just do it. And if they don't want to, then that's your choice.
And do you base it based on like replacement cost or because again, used equipment is not worth a lot?
Yeah, that's another conversation I often have. So dental chairs are a good example. My understanding is the cost of those go up pretty rapidly year to year. Uh-huh. So I tell people if you had to buy everything today, that's the number you should be using. Okay. So if you have like 10-year-old chairs, you can't pay what somebody paid 10 years ago. You got to use current values. Google can be really handy for that. Or I know a lot of people don't like doing paperwork. So if you have team members that you have on payroll that are looking for projects, that can be a great thing to delegate.
Yeah, good way to use your PPP.
Absolutely. I agree. I agree. And then along those lines, you do need to also check your plan and make sure you have some kind of data breach coverage. So just like you have been following what's going on in the dental world, and I have seen attorneys soliciting for medical data breach suits, unfortunately. Mm-hmm. So make sure that's in there too. And again, along those lines, I know, and this actually dips into the next thing I was going to cover, which is malpractice insurance. A lot of dentists are moving to teledentistry and virtual appointments. you need to be very cautious with that. So you need to have a way to safely secure the data for the patient, you know, the date of birth, the HIPAA protected information. I know a lot of clients like to text, and that is not a safe way to send information. I actually had a story from a couple of years ago, and it wasn't a malpractice client, but it was a disability client. And they texted a patient and they sent some very sensitive information about a diagnosis. Well, they had looked at the patient intake form and they had accidentally put the emergency contacts info in instead of the patient. So they sent the patient's family member the patient's medical information, and the patient hadn't wanted to share that with the family. So texting is not your friend. Move it to email as much as you can, and hopefully your email is secure, or if it isn't, you can look into something where it is secure.
Yeah, typically portals are probably the way to go.
Yeah. And then if you don't want to make that investment, because I understand it's costly, you know, a great method can be to email a client, or, you know, if you really want to text, you text them and just say, please call me. And then you go over it on the phone, and then, you know, you're directly giving the information to whoever it's intended for.
Right. Yeah. I mean, I know, like in the financial world, I mean, there is actually laws that prohibit us from sending stuff by email.
Yeah.
Of information. So that's why we try to use portals as much as possible, and use data encryption.
Absolutely. But this is a new territory, because before now, I mean, who really did any teledentistry? So at least on a large scale. So yeah, it's important to be cautious of those things. And as tempting as it is, if you have a choice between text and email, use email. Yeah. You're way less likely to make a mistake there. So just my 2 cents. For malpractice, if you are doing teledentistry or any kind of diagnosis that way, you want to make sure your carrier is good with it. Some are, some aren't. If you haven't already, and you've been off work, or you are at a very reduced capacity, make sure you reach out to your carrier to process part-time changes. Now, some carriers aren't processing those yet. They're kind of waiting to see what the reopen date is, because it's part of the calculation. But it's still important to reach out so you have some kind of record of you trying to make that contact. And then if you have an occurrence form policy on the malpractice side, and you've truly not been working since March or April, wherever you're located, for some of those clients, it has actually been appropriate to just fully cancel. The nice part with occurrence policies is you can do that without cost. And then what happens is when the dentist or specialist is ready to get back into office work, we just restart a new plan. So it ends up being a better cash move for them there. Typically, you do need to be about 3 years out of school for the numbers to really make sense. But again, it's an individual thing, so you want to contact your carrier for that piece. On life insurance, again, with the downtime, a lot of people are relooking at these plans. You want to make sure your beneficiaries are up to date. So I've had clients where, you know, they got their plan maybe after child 1 and they had child 2 or 3 since then. So make sure all the kids are on there. You don't want to play favorites with that. If you've done any estate planning, and your trust should be the beneficiary, now is a very good time to take care of that. Just make sure everything's lined up. And then, you know, Bassim and I were talking before the call started, and we both know people that have actually had COVID. Luckily, at least on my end, nobody's passed away, thank goodness. But it is important that your family members are aware of what you have. These days with digital policies, it can be very challenging to keep track of who has what. So back in the old days when they had paper booklets, you know, it wasn't uncommon for somebody to pass, their family's cleaning out their stuff, and they literally stumble across a life insurance policy. These days, if you're not in somebody's email, you may not be aware. So we're doing a lot of summaries where we're preparing for clients, you know, sheets that show policy numbers, carrier names, amounts, so people have that information ready at hand. And I do truly hope nobody has to use it, but it is a practicality we need to talk about.
Absolutely.
So,
yeah. Well, this is all very valuable information. Now, with regards to life insurance and updating beneficiary information, I have a story to tell. Is it okay if I interrupt you?
Oh, yeah. Please jump in.
Uh, you talked about updating your beneficiaries after, a new child, but also after a divorce, updating your beneficiaries is very important. There were cases where I've been practicing for this year. It's going to be 23 years, and there were times when I've seen, clients, forget to update their life insurance policy after a divorce, and or even update their will and trust. And I've seen this situation. This actually happened. This person was in the they were in a ICU, basically dying, and they hadn't updated their power of attorney. So,
oh no.
Yes, you know where I'm going with this, right? So their
I do.
former spouse basically said, "Okay, let's pull the plug," and they were also the beneficiary on the life insurance policy. So, I've seen this happen. So, it's very important to stay on top of updating your beneficiary information on your retirement plans, your life insurance, disability. Also, make sure you have a good family attorney that does, or actually an estate and trust attorney that, is not just going to take your information and put the information on a template and do a trust. You need to actually have someone that is an expert in estate and family law that can put a trust document together and basically go over all these scenarios, because it's not just about creating a trust document. It's about transferring the accounts into the trust. It's about making sure you update those beneficiaries. So it's amazing what life teaches us and experience, shows us. And I appreciate that you brought this up.
Yeah, and actually, you bring up a great point. So in the event of divorce, depending on the state you're in, I know when you sign paperwork here in California, there's usually language in there that says you can't change beneficiaries at the filing. And in California, at least the last time I looked, the timing from when you file to when it's finalized is 6 months. So I've also seen the reverse, where people file divorce and they're immediately trying to change the beneficiaries. You legally can't do that either. And then sometimes in divorce decrees, I'm sorry, Bassim?
Until the divorce decree is final?
Correct. And then sometimes as part of the final divorce decree, especially if there's minor children, they can have rules in there about leaving the life insurance as it is until the children grow up. Mm-hmm. So if that's your situation, you need to track that. So when, you can legally do so, you make the change.
Right.
So yeah, that gets very, very tricky. And then one other thing that you inspired me to remind people of is if you got a policy purely for a practice loan and you've paid that loan off, you want to go ahead and get the bank removed from the plan. A lot of my clients do choose to keep those business policies for personal use because you can do that. Mm-hmm. Now, if God forbid somebody dies and the bank was listed and the person didn't owe them any money, the family would still get the money, but it's a little more of a delayed process. So now can be a very good time to clean those things up. And then along those lines, you do want to make sure that if you got a practice loan and you didn't get around to getting the required life and disability, you want to look at that too, because in the downtime, some of the banks are auditing those things. We've been getting requests to verify coverage. And a lot of times in practice loans, there is language built in that that says if you don't get the insurance within so many months or what have you, days of the closing, they can assess charges, and some of them can be quite large.
Yes.
So now is a good time to clean that stuff up. And then the last point on the life insurance side, well, 2 points. A lot of people have been thinking about coverage because of the nature of COVID. Some of the carriers have actually made it easier to get coverage, so they've removed exam requirements. So if you were thinking about something and you just didn't want to deal with the hassle of the examiner, and I don't blame you because needles are scary. And I personally don't like blood draws, but some carriers have removed that. And with the financial difficulties happening, some companies are delaying due dates on life insurance. So you want to talk to your agent and see if that's something that you can take advantage of.
Right.
So on the disabilities, or I'm sorry, on the workers' comp side, a couple things to be aware of. On the EDD, where they opened up for the self-employed folks, I actually did that paperwork for my husband. He has a sole prop. I noticed on the forms there was actually a question that asked if you should have been classified as an employee and you were not. So I don't know how the EDD is going to handle these things. My suspicion is, based on prior experience from a couple of years ago when they cracked down on independent contractors that shouldn't have been independent contractors, I expect they're going to require a workers' comp on those people. So practice owners should get ready for that possibility. And it would just be a cost thing. So let's say the payroll, with just the staff and non-doctors was maybe 100K. And then with the dentist that was classified as an independent contractor, it would actually be 200K. Well, you could reasonably expect your workers' comp to go up about 100% in that scenario because your payroll doubled.
Right.
So people may want to budget for those kind of things. Now, some companies are allowing the reverse. So if, let's say your payroll dropped down dramatically because you had to furlough everybody, or you only, you had 5 team members and you kept the office manager and everybody else is off. Some companies are allowing midterm reductions, which is not a thing that's normally done. So that can be a good move to provide some financial relief as well. It varies widely by carrier. So you just have to reach out to your agent to get some help there.
Yeah. And a couple of weeks ago, you and I were talking and we were discussing whether, business owners should really add themselves to the workers' comp policy. Remember that discussion?
Yeah, I'm still trying to research if that's a practical solution.
Mm-hmm.
In general, I do think it can be a good strategy for a dentist or doctor that can't get disability coverage, because it at least covers the workplace injuries and sicknesses.
Yeah.
Our discussion revolved around whether that would be a good strategy for helping with COVID, because dental offices are considered higher risk environments for that. I'm still trying to figure out if that's a viable solution when reopening happens.
Mm-hmm.
So stay tuned for that.
That sounds good.
And then on the disability side, for those doctors that do have private disability insurance, for some of my clients that are pregnant or have immune deficiency disorders, they are actually able to open private disability claims. So especially for pregnant clients, OBGYNs are not allowing dentists to go in clinic. It's not safe. Apparently there's risks, especially in the last trimester. And then I do have some clients with, immune system issues where their doctors have said the same thing. So in that case, a personal disability claim should be pursued.
So even if they're not sick, if they're just in the high risk category, you think?
Yeah, because if their physician's telling them it's not safe to work,
Mm-hmm.
that's a medical situation.
Right.
Now, not every carrier is honoring that, but I have seen some claims that are getting looked at.
I see.
And it doesn't hurt. It's the same thing as the commercial. So if you file a disability claim with private disability insurance and nothing comes of it, nothing happens to your premiums, nothing happens to your policy. You literally have nothing to lose.
Right.
So it's a good move.
Yeah. No, this is all very valuable information.
Thank you so much. So I would just encourage people, get your stuff organized, reach out to your agents. Most of us are working. So my office was actually set up remotely. The first team member was remote in 2015. And then I went full-time, work from home in 2017. So for a lot of us in our field, it's not a new situation.
Right. Yeah. It was not a very difficult switch for us to switch everybody to working from home. I mean, luckily we have a great IT company, and we were able to do everything securely, and it was just a matter of going to Costco, buying some laptops, but on the IT end, I mean, it was a lot of work on on the IT side to make sure that we have all the security in place. But I'm old-fashioned. I still love to dress up and go to the office every day. So here I am. I'm in the office. There's probably only 3 people here in the office today, and everybody else is working from home. So,
oh, and sorry, Bassim, that reminds me of another point. So as we move to our new normal, I do know some dental folks have had some great conversations where, some people do prefer to work from home. That's actually my personal preference.
Mhm.
So if you do have an office manager or a billing clerk or somebody of that nature that can do some remote work, make sure you update your workers' comp and your commercial plan to reflect that other location. So like, let's say a laptop gets stolen or, there's some other kind of issue that happens at their home that you don't have a gap there.
I see. So for all of us that are having some employees work from home, we need to update that with our workers' comp policy, and maybe even the regular like business liability policy. Do we need to do anything?
You do both.
Okay.
Yeah. So the business liability policy would cover the like the laptops and the equipment and such. The workers' comp would happen, like, let's say, I don't know, in our field it's so weird because, like, what would it be, a paper cut or something? But let's say
These are pretty painful, though.
Yeah, no, I know they can be painful, but let's say a team member drives from their house on the clock to Staples to go get some supplies, and they get in a car accident. That could actually fall under workers' comp as well.
Mm-hmm.
So,
now you touched a little bit earlier on employment practices policy.
Yes.
Can you take a few minutes and again describe to us, because I don't think everyone has that rider as part of their malpractice insurance, or tell us how can we make sure that we're not exposed in terms of employment claims, and what's the solution if it's, I know in many cases it's just as easy as calling your insurance carrier and find out if they offer that rider, but maybe give us a little bit of details on that, because I know for a lot of my clients, employment practices is something that keeps them up at night.
Yeah, I mean, the stats are it's more likely than a malpractice suit, although I have actually seen a little bit of an uptick on the malpractice side in the last year or two. But what EPLI does is it's employment practices liability insurance. So it pays if there's things like wrongful termination, discrimination, failure to hire. So this can happen a lot at transition. So, like, let's say our client buys a practice and there's a staff that's already there, and they decide that they don't want to hire the office manager because it's not a good personality fit, and the seller was older and the buyer's younger and they just don't gel right. Technically, the office manager can allege age discrimination. Now, whether or not it's true, that would still need to get defended. So typically with EPLI, and that is usually attached to the commercial or business owner policy. It's a feature on that. I usually recommend that people look into that as they're hiring. So if even before opening, like, let's say there's a transition period where, and the purchases are a little different than the startups. So with a practice purchase, let's say the dentist closes on the office May 15th, and their official first day in the practice as owner is June 1st. Well, between May 15th and June 1st, they may be, the seller may on paper fire all the employees, and then the buyer rehires them, which I know is a strategy that's the cleanest way to do it. You would want the EPLI active as of the earliest date, which would be May 15th in this example. So that way, as you're figuring out which staff you want to keep and negotiating compensation and such, you have the coverage there already. It comes in increments of usually 25,000, 50, 75, 100, 250, $500,000, and $1 million. We usually recommend over 50, just because the legal bills can escalate pretty fast. And talking to my attorney, he says 100 is usually a good place to start.
Right.
And then some carriers have rules where if you've owned the practice, like if you're a brand new business owner and you have no track record, they sometimes won't offer higher amounts, like $1 million, let's say. So, work with your agent to see what's available to you. Now, a startup's a little different. So a lot of times with a startup, you're not inheriting a staff. You find your own, but there can be a little bit more lead time where, let's say, you've built out an office and you're getting the office organized, or you're doing some training. Anytime somebody's, officially your employee, you should have the coverage, even if the office isn't open. And there gets to be some confusion there. So again, that same example where, let's say you do a build out and your team is on site May 15th, but your soft opening's not till June 1st, you would still want the coverage active May 15th. Now, sometimes people get this mixed up with workers' comp. So in that example, well, actually, you would want the workers' comp active as soon as they're on site. If you spend the weeks before that negotiating, the EPLI may be active a little earlier.
That's great information. And sometimes with my employment practices policy, if I had a really confusing HR question, sometimes actually I would reach out to the risk prevention hotline with my insurance. They actually provided me with pretty sound HR answers. And I was surprised sometimes, because sometimes they actually told me, as an employer, what I needed to do just to kind of be kosher and document. So sometimes they actually give good practical advice as well.
That would be less costly than an attorney consult. So,
ultimately, it's in their best interest for you to be communicating with them, because if you're in a questionable situation, insurance companies always prefer that they're in the loop from the beginning.
Absolutely.
So that they can help you mitigate that crisis and maybe for it not to develop into a bigger problem.
No, you're absolutely right. And that also reminds me, every now and then I'll get a call or an email where somebody has been served paperwork by a former team member and they want to add coverage at that stage. You can't do that. So at that point, you're aware of the issue. You can get it moving forward, but you can't go back and insure from before the person filed the suit. And I like to equate it to, if you wreck a car, you're not going to try to go get car insurance the next day. But I get those inquiries probably at least 2 or 3 times a year. So with a lot of stuff in life, you have to have it before you need it.
Absolutely. And I think between a cyber coverage and employment practices, I see these things overlooked all the time.
Absolutely.
Now, what other things do you see people overlook in terms of coverage?
There's a couple things. So I'd say the cyber and the EPLI are probably right up there. Again, I touched earlier on the business property, where sometimes people just take the operatories and they do some quick math, or they buy equipment and they fail to let their carrier know and update their coverage. On the malpractice side, there can be individual coverage and entity coverage. So individual covers the human practitioner, the dentist, doctor, what have you. Entity covers the corporation. Some carriers actually don't offer true corporation coverage. Some do. When people get their corporations lined up because you gave them the advice that, tax-wise, it could be a smart strategy. They work with an attorney, they get it set up. Sometimes they will forget to get their corporation covered for malpractice. It's an important step. It's not costly. So usually, it doesn't add that much premium, but it essentially doubles the coverage. So that's a really good fix. The beneficiary updates are something I often see overlooked. Removing banks is another thing. And then, keeping your disability coverage up with your income. So it's not uncommon that people, they get coverage as new grads. They work for a while, they buy a practice, their income shoots up, and they haven't really looked at their coverage in a while. And the disability policies would cover if you contracted COVID. Now, you do have to meet the waiting period, and on personal plans are typically 90 days. On business ones, sometimes those can be as short as 30 days. But those are the things I see overlooked the most. And then on the life insurance, again, updating with life changes. So, divorces, trusts, that kind of thing.
Wow, great pearls of wisdom. Thank you so much, Anjali. Was there anything else you wanted to add?
No, I want to thank you for your time and for being such a leader during this event. I've relied on you very heavily for your webinars. And I want to listen to your part. So do I need to hop off and call back in, or can you?
No, you could continue. Yeah, you could continue. But
Okay.
thank you again. This was really informative. And I'm glad we can record this and we can share it with as many people, because I think these are really true pearls of wisdom. And you know what I like about you, Anjali, is that this was purely educational. So I love that about you, and thank you so much for being who you are.
Thank you so much. Do you mind muting me so my background noise doesn't taint
Sure.
what you're going to do? Thank you.
Great. All right. So hi, everybody. I'm Bassim, and today I just wanted to give you a quick update. There has been a few changes this week as far as the PPP. So I'll take maybe a few minutes here to again go over what we know so far, what we don't know, and also what to expect in the coming days. But this week we actually saw some movement from the SBA. They're almost updating their frequently asked questions every day. So just to recap, PPP loan forgiveness and what you could spend your PPP loan monies on. So basically, you could spend your PPP funds on payroll costs, which includes wages. It includes paid sick leave. It includes paid time off. It includes health insurance, retirement contributions paid by the employer, and employer portion of state payroll taxes. So that's what's included in payroll costs. You could also spend on rent, interest, and utilities. Now, when they look at forgiveness, they're gonna have to make sure that at least 75% of the amounts you spent were spent on payroll. Now, as you all know, the amount that you spend and is potentially forgivable will be reduced if you have reductions to your full-time equivalents during the 8 weeks as compared to your full-time equivalents prior to COVID. Also, there will be a reduction if you actually reduce the salaries of people that you bring back who or beyond 25% of their salary. So if someone was making 100,000 and when you bring them back, you're only paying them, 60,000, that will also reduce your PPP forgiveness. Now, the reduction can all go away if you bring everybody back and you restore their salaries by June 30th. Now, this is pretty much what we know. We also know that the 8-week start when the loan is dispersed to the borrower. So the 8 weeks kick off when the funds are received by the borrower. Now, there are a lot of unanswered questions like we discussed last week. And I think of all the questions that we posed last week, one question has been answered by the SBA this week. So we still don't know if the amount spent, does that include expenses that are incurred and paid or expenses that are paid? So to give you an example, if my rent was deferred by my landlord back in March and April, and now I got my PPP monies in May, can I pay rent that I owed in March, April, in May, or do I only pay the May rent and the June rent, right? So Is it when it's incurred and paid, or is it when it's paid? So we don't have that question answered. My gut feeling tells me it's probably incurred and paid. Um, Also, how are we going to be aligning our payroll cycles with the 8 weeks? That's going to be interesting to see. And I'm thinking maybe we're going to have to adjust it at the end of the 8-week period, maybe run another payroll right before your 8 weeks lapse to kind of catch up on that. We've got a lot of questions from people. Can we give bonuses or pay increases to family members or employees, or, you know, I can tell you from conversations I had with bankers, and bankers are going to be the ones who actually oversee the forgiveness. They tell me that they're going to be looking at pre-COVID versus post-COVID. They have already the data. When you applied for the loan, they have a list of your employees. They have a list of how much everyone was making. So they say don't make any big drastic changes in terms, again, if you want to ensure forgivability. We don't know the definition of full-time equivalents. You know, normally in the business world, we think FTEs are based on 40-hour weeks, but you know, there is some IRS guidelines that we've used in the past with prior laws to consider, like for example, the Affordable Care Act. You know, they considered FTEs, I believe, at 30 hours or 32 hours. So, you know, we don't know what the definition of full-time equivalence is with regards to the PPP and the CARES Act. Also, another question, you know, if you had a bad employee, are you going to bring them back just because you have now the PPP monies? And again, this is, you know, there's going to be a lot of other things involved, you know, from an HR perspective. Maybe it is a blessing in disguise to let go of bad people that you've been wanting to get rid of. But if you let go of employees and hire and replace them, you know, replace them by new employees, will that hurt your FTE calculation? At this point, we don't have an answer to that. Now, we said that what if you're trying to bring everybody back by June 30th so that you could maximize the forgiveness for the monies that you spent during the 8 weeks, and some of your employees don't want to come back? Well, we'll find out later that actually the SBA answered that question. So that's a good thing. Finally, we're getting some questions answered. Like I said, lenders are going to be coordinating the forgiveness. Hopefully they will also be able to provide you with answers, because we expect, since forgiveness is going to be administered by the lenders, some lenders are going to have different processes from others. So we're going to have to wait and see how different lenders are going to do things differently. I mentioned last week that the government is publishing a list of businesses which received PPP funds. So that list is going to be available to your customers, patients, and employees. Also, every day the Treasury and the SBA are issuing new guidance. For example, they're saying now that you know, when you applied for the loan, you certified that the loan was necessary for you for your business operations. Now they're giving people, I believe, until, at first they said until May 7th, and then they increased it until, or extended it until May 14th, that if you didn't think you really needed that money and you still got it anyway, that they'll give you a chance to refund the money until May 14th. So that's an example. But again, they don't really provide guidance on what's considered necessary, right? I mean, for all of us, we think there is a huge uncertainty ahead. And 2 months ago, when this whole thing unfolded, you know, we all thought that, you know, this is going to be, and we still continue to think, you know, this is going back to normal is going to take some time, and there might be also a new normal. So as you could see, the rules are always changing. And as I mentioned before, you know, they are answering some questions at this point. So how do we make decisions to maximize our PPP funds? What I'm telling people is don't let the tail wag the dog. So use your business instincts, business prudence to guide you in this situation. So don't base your decisions on, oh, I need to just maximize my PPP. I think your decisions should really be based on good, sound business thinking process. Again, don't think the government is going to save you or save your business. You built this practice with the help of your amazing teams. So I would look at you and your team to rebuild your business again and get back to the new normal. I doubt if the government is going to be able to help much with that. So look inwardly for answers on bringing your business back. Keep records. I said last week, keep records, assuming the SBA will audit your loan. And we found out this week they are going to be auditing pretty much all the loans with big emphasis on loans over $2 million. But one of the Q&As that they answered this week, they said they will be auditing pretty much all the loans. And again, as I mentioned earlier, and I can't focus enough on this, basically focus on making smart business decisions and not just rely on maximizing the forgiveness. For example, are you going to bring back bad employees just for the sake of maximizing your FTE headcount? Maybe this is if business is not going to be busy in the beginning, maybe consider your employee choice on who you bring back and maybe who you need to replace, irrespective of if it's going to be forgiven or not. And again, we said, know your numbers, know your overhead, figure out what your cash burn rate. If you need help with that, we're actually starting to schedule quarterly meetings with our clients to look at first quarter numbers, see where you guys stand. And as we do these meetings, we're going to also be looking at your cash flow projections. Make sure you're surrounded by the right professionals to guide you, and stay in constant communications with your team and patients. Also strive to make your work environment safe for everybody. If you're not already open to see emergencies, you should really be ramping up to see emergencies and be preparing yourself and your team for reopening here very soon when you're given the green light to open up. Now, here are some of the questions that were answered by the Small Business Administration this week. So according to their frequently asked questions, question number 40, the question is, will a borrower's PPP loan forgiveness amount pursuant to Section 1106 of the CARES Act and SBA's implementation rules and guidance be reduced if the borrower laid off an employee, then offered to rehire the same employee, but the employee declined the offer? So basically it's asking, hey, we're now offering our employees to come back, but now, they're getting such a sweet deal from unemployment and they don't want to come back. What do we do? And here is the SBA's answer to that question. The answer is no. It's not going to hurt your count. An exercise of the administrators and the secretary's authority under Section 1106 of the CARES Act to prescribe regulations granting de minimis exemptions from the Act's limits on loan forgiveness, the SBA and Treasury intend to issue an interim final rule excluding laid off employees whom the borrower offered to rehire for the same salary, wage, same number of hours from the CARES Act loan forgiveness reduction calculation. So they're basically saying that if they decide not to come back, that's not going to hurt your calculation. The interim final rule will specify that to qualify for this exemption, the borrower must have made a good faith written offer of rehire, and the employee's rejection of that offer must be documented by the borrower. So you're going to need to document. Employees and employers should be aware that employees who reject offers of reemployment may forfeit eligibility for continued unemployment compensation. And I would underline that employees and employers should be aware that employees who reject the offer of reemployment will forfeit eligibility for continued unemployment compensation. So there you go. We have an answer to one of our many questions. Again, the other question that was answered last week was, will the SBA review individual PPP loan files? And again, the answer from the SBA is yes. The SBA reminds all borrowers of an important certification required to obtain the PPP loan. To further ensure PPP loans are limited to eligible borrowers in need, the SBA has decided in consultation with the Department of Treasury that it will review all loans in excess of $2 million in addition to other loans as appropriate. Following the lender's submission of the borrower's loan forgiveness application, additional guidance implementing this procedure will be forthcoming. So again, as you spend the PPP funds, be aware that they are going to be potentially auditing some loans, and just make sure you're documenting how you spent the money, and know also that if you pay related parties, for example, I think that's going to be subject to a lot of scrutiny. We're not saying do not pay it, but we're saying just be diligent in documenting that everything was done at arm's length. All right, we have some questions here, and we'll answer some of those questions and wrap it up. So, is medical insurance premium considered part of payroll cost? Yes, medical insurance premium is considered part of payroll costs, and so is retirement contributions paid by the employer. So basically, again, just to be clear, on payroll costs, it includes wages, paid leave, it includes health insurance, it includes state payroll taxes, and retirement contributions. Of course, all of these things are things that are incurred by the employer. Another question, since the PPP can pay for medical plans for the office, can PPP be used to pay for medical insurance that only covers the owners? That's a very good question. We don't really have an answer yet. I believe for sole proprietors who are not incorporated, I want to say that they actually excluded that for the owners. I think I may have seen that, but we don't know for S corporations. So I believe there's going to be more guidance on that. But the way I've been telling many of you the last few days and weeks is that, if you're basically having to spend what you normally spend, hey, if part of it gets forgiven, then great. If it doesn't get forgiven, then you didn't lose anything. You still had to pay it anyway. So I'm still doubling down on that recommendation until we get further notice. But in absence of a lot of guidance and answers to our questions, I'm going to have to proceed with caution on this. Are there any other questions you guys have before we wrap up? If not, then I want to thank you very much for attending with us here today, and I just want to wish you a very good day, and hopefully we'll be talking again soon. Thank you again for attending this webinar, and have a wonderful day. Thanks.